Today you're going to hear 15 ways you can invest your first $1,000. I'm going to give you the first one right away. This first one is very different from the rest of the 14 simply because the return on investment, ROI, cannot be defined. It can be 1,000%, it could be 1,000,000%, it really depends on what goes into here. And that thing is to invest in yourself. Now if you read around, this has been mentioned many times. Go for courses, upgrade your skill set. Listen to what Warren Buffett has to say. This $100 college course is actually a key reason why he's successful today. And that college course touches on communication, public speaking. These are things that really influence his ability to negotiate, to actually convince stakeholders in his deals for his business. So again, take note, investing in yourself is one of the best ideas. With that iron out, let's move on to the rest of the 14 and I'll actually break down for you in terms of risk, in terms of the knowledge needed. And if you stay to the end of the video, I actually show you my top preference. So if that interests you, continue watching on. Hi guys, welcome back. Now let's move on to the second way you can invest your first $1,000. And it's to invest in the products that are aligned with your hobby. Now, if you are a toy collector, you know a lot about toys, what toys are actually trending on the market. Or if you're into bags, you know which one can potentially be marked up, which one are collectibles, or watches. Then again, you have an edge over the market. So when you look for products that's aligned to your hobby, it makes it fun. Because this idea is actually very high risk. You're kind of doing a business really. It also needs a lot of knowledge, and if you have passion for it, it's easy to acquire that knowledge. Make sense? So again, I'd like to pull up this example which I mentioned before on this channel. This 16-year-old boy actually rakes in more than $30,000 a month selling sneakers, something that he's passionate about. So again, risk is high, knowledge needed is high for you to gain an advantage over the market, and this is the second way for you to consider. Let's move on to the third. Now the third way you can invest your first $1,000 is into dropshipping business. Now dropshipping business is ultimately still a business, which means it's high risk and there's a lot of knowledge needed. That is why if you are keen on it, I actually have a previous tutorial just to explain briefly on it. So I'll leave links below. And then what I'll suggest is look to all the Facebook groups that you can find to gain knowledge, to be part of the community, know a lot more before starting. If not, look around YouTube. I'm sure there are a lot of top experts that are willing to share how to do dropshipping. But don't need to spend on courses. Acquire the right knowledge, test it for yourself first. Make sure that it's something that fits you before going a bit deeper. But ultimately, dropshipping is still a business that you can start off with very low capital. It's something for you to consider. The fourth way you can invest your first $1,000 is into cryptocurrency. Now, cryptocurrencies have been moving upwards these days, and Ethereum in particular has cracked new highs. I've actually advocated on this channel to invest in cryptocurrencies for the long term. Avoid trading it because they're so volatile. But I do believe in Bitcoin, I do believe in Ethereum. These are the two main ones. And if you're not too sure about cryptocurrency, look for my previous tutorial on how you can actually invest very simply into Bitcoin itself. Now, I believe cryptocurrencies have a future in our society, but as of right now, it's very high risk and you do need some level of knowledge. But having said that, the starting point is actually pretty low. You can actually get invested into a few coins with just $1,000. But again, invest for long term, don't overtrade. That's a key message that I've always shared on this channel. The fifth way to invest your first $1,000 is into options contracts. Now, options contracts let you get exposure to a stock with much less an outlay simply because there's a leverage factor to it. If you're not familiar with options, let me read out with you. An option is a contract, an arrangement between two parties that grants the right to buy or sell an asset, usually a stock, at a particular time in future for a particular price. Now, US stocks in particular have a very vibrant options trading market. Singapore stocks, not so much. So if you're keen, look for my links below for Tiger Brokers. They actually have a platform for options trading. But having said that, options trading is highly risky. You also need to have the right level of knowledge before delving into it. So it's not really for new investors also. So I would strongly suggest educate yourself, read widely first, be very familiar with it before using this idea as one of the ways to invest your first $1,000. The sixth idea you can invest your first $1,000 is into peer-to-peer lending. Now, there are actually a lot of platforms in the market right now, and if you're keen on this idea, my suggestion is go to Seedly. they actually have a breakdown on what are the various platforms with a bit of reviews from existing users for you to decide whether it fits you or not. So over there, you can see easily 3 that I've highlighted. For myself, I've actually used a previous peer-to-peer lending platform that's not industry, and it's actually had some default, so my experience is not too good with it. I do believe it's pretty high risk, although you don't need to have too much knowledge, because ultimately, you're delegating to the platform to find you a party you can lend money to, and when you lend money, they actually generate an interest. That's how returns are actually generated with this idea. Now, after going through so many high-risk ideas, the 7th method is actually something that's very low risk and doesn't require much knowledge. And before you get there, smash the like button so that more people can see valuable content like this. And again, if you have benefited, subscribe, because we'll be launching ideas every week to help you in your financial journey. We'll touch on a broad range of topics, ideas such as stock research, such as retirement planning, all the way to simplistic ideas like this if you are a beginner investor. So the 7th way you can invest your first $1,000 is actually through Singapore Savings Bond, SSB. Now the bond rates right now are pretty low. You'll struggle to get a percent even, keeping it for a few years. But actually this method is very easy. You can actually just go to ATM and buy as long as you have a CDP account. Each transaction there's $2 buying and $2 selling. That's something to take note. And with that, you can actually just buy the bond and just stash your monies away. But again, with returns so low, it doesn't really grow your wealth. So do take note of that. The 8th way is also very low risk and does not require knowledge at all. And that way is actually to invest your first $1,000 into your own CPF special account. Now, if you are PR or Singaporean, you do know that you have actually a CPF account. And you should top up to CPFSA, which gives you 4% at least in terms of returns. Now, how can you contribute to CPF? The simple method is to do retirement sum topping up, and that's actually RSTU. This method, do take note also, there's terms and conditions, and one of which is you cannot hit the limit, the full retirement sum limit. So look for sources to understand it fully. But if you're a new investor today, just started working, I'm pretty sure that limit has not been reached yet, you can consider it. And the only shortfall is you cannot touch their monies for a very long period. So do take note, this is a method that is very low risk and yet does not require knowledge, and it can actually give you 4% at least in terms of returns. The 9th way you can invest your first $1,000 is into retail bonds traded on the Singapore Exchange. Now, retail bonds are actually supposedly pretty low risk as compared to stock investment. And if you look around, there are actually a few names, very simple to understand, and let me share with you if you're not familiar with it yet. The first one I'll pull out for you is SIA 3.03%, 240328. Now, how to understand this? 2403 is actually March 2024. So this bond actually matures on 28 March 2024, whereby your capital is returned if SIA does not default. So very simple to understand. So retail bonds actually are medium risk in my opinion. They require some level of knowledge, but it's not as difficult as stock investing where you really need to track the business. Another example that I should share with you, Astra 4.35% B, 280614. So this actually matures in 2028, correct? So it depends on your outlook and your financial needs. So look for the right bond that fits. And with that explained, let's move on to the 10th way you can invest your first $1,000. Now, the 10th way to invest your first $1,000 is actually into OCBC shares. And why do I bring up OCBC? Simply because the share price hovers closer to $10 than UOB and DBS. And from just a very simplistic point of view, the three banks have very similar profit ratios and outlook to things. So if you're not familiar which one to choose, and if you only have $1,000, maybe OCBC is just a very simple starting point. 100 shares, you can get it with about close to $1,000 thereabouts. Now for banking shares, the risk is also higher because you're buying a stock. You do need to have some knowledge also in terms of monitoring OCBC's business performance. But ultimately, we do know that banking shares in Singapore are more stable than most other industries because we are ultimately a financial hub. The 11th way you can invest your first $1,000 is into STI ETF. In a lot of ways, I believe this is a superior method if you're a new investor as compared to the 10th way, which is buying 100 lots in OCBC shares. Now, STI ETF gets you exposure into DBS, UOB, and OCBC inclusive of many other top stocks in Singapore. So buying a whole basket means the risk is lower, that there is less knowledge needed because you're just buying an index, you're not really tracking a particular share. Now, STI ETF has seen quite a lot of evolution. Right now, there are a lot more REITs, exposure into STI ETF. I've actually a previous tutorial on STI ETF itself and why I believe 2021, it could do better than many of its regional peers and global indexes. So if you have a keen look for the tutorial, I'll leave links below also, and I'll move on to the 12th method. Now, if you're looking to invest into technology and not too much into STI, then this 12th way to invest your $1,000 really works. It's actually investing into ETFs that are exposed into the technology sector. I have two names to suggest to you that are run by Invesco. The first is QQQ, which gives you holdings of Apple, Microsoft, and Amazon. These are household names. The second is investing into CQQQ. This ETF invests into Tencent, Meituan, Baidu. So I've actually covered before on Chinese technology, something which I'm personally bullish on. I'll leave links below if you're keen to find out more. I believe that when you buy ETF, it's also higher risk, although there's diversification. And when you narrow to a particular sector, naturally it's a bit more volatile. You need a bit more knowledge to track the industry. But it's still a good method to get invested with your first $1,000. The 13th way you can invest your first $1,000 is into globally diversified funds. Now, I've actually two names to suggest to you. The first is dimensional funds. I've actually covered on this channel before, which I'll leave links below. Dimensional funds are low cost and they are just a value approach to get you broad-based global equities. The second is actually a more actively managed fund, which is United Global Quality Growth Fund. This fund is actually managed by UOB Asset Management. It's actually outperformed S&P 500. I have actually a previous tutorial that covers on it fully. It can even be bought with CPFSA. So in total, globally diversified funds, you're not aiming for a particular country like STI or a particular sector like technology. And naturally, the risk is lower as you're more diversified. The knowledge needed to track it is also lower. It's more of a passive approach. So with that, let's move on to the 14th way you can get invested with your first $1,000. The 14th way to invest your first $1,000 is into robo-advisor portfolios. Now, there are many robo-advisor portfolios right now in the market. There's, for example, StashAway, there's Syfe, there's Endowas, there's also Auto Wealth. So there are quite a few number, and one simple way is to go to Seedly to get reviews on it. So over here, you can quickly find out the fees they charge between these robo-advisor portfolios. And a simple tip is within a robo-advisor portfolio, you can also select whether you want to be more aggressive or more defensive. So a typical portfolio that is more aggressive will have say 70-80% into equities, less in the bonds, and a more balanced one will have about 50% in bonds, 50% into equities. So again, look for any of these portfolios, it gets you diversified and there's asset allocation achieved with these portfolios. The 15th way you can invest your first $1,000 is into Syfe REIT Plus portfolio. Now, I'm a big fan of it, I kept it to the end, simply because I do believe Syfe REIT Plus portfolio is pretty attractive in a lot of ways. It simplifies REIT investing for you. And in Singapore, we are all familiar with REITs simply because some of the names, CapitaLand, Mapletree, Ascendas, Keppel. These are names we resonate with, we are familiar with them. It's easier to ride up the ups and downs. And that portfolio buys into a whole basket of REITs for you. But again, disclaimer, when you buy into a very focused portfolio, you're investing in Singapore and you're investing in the REIT sector. Very narrow, riskier, but again, if you are willing to invest long term and you're familiar with it, maybe it's a good idea also. So leave your thoughts and comments in the sections below, inviting you to the tutorial which I break down Syfe REIT Plus portfolio. Hopefully it can help you in your journey also, and share this video with a friend who should see this. With that, I'll sign off and see you in that tutorial. Take care and goodbye.